Hey everyone, welcome back to Whats ZEE. Today I want to break down a term you've probably heard thrown around a ton in business conversations: equity. It sounds fancy, maybe even a little intimidating, but trust me, once you get it, a whole world of business makes way more sense. So what is equity really? Imagine you and a few friends decide to open a pizza shop. You all chip in some money to get it off the ground. That cash you put in and the share of the business you own as a result, that's your equity. At its core, equity just means ownership. It's your slice of the business pie, literally if you're selling pizza. Now, equity isn't just about how much money you put in. Let's say over time your pizza shop grows, gets more customers, and is now worth way more than when you started. Your equity also grows. If you decide to sell your share, you'd get a cut of what the business is worth now, not just what you put in at the start. That's why equity is such a big deal in business. It can grow as the company grows. But wait, there's more to it. In the business world, equity can mean a few different things, depending on the context. If you hear people talk about shareholder equity, they're talking about what's left for the owners after all the company's debts are paid off. It's like if you sell all the pizza ovens, the tables, the sign outside, and pay off everything you owe, what's left over belongs to the owners. That's the equity. There's also equity in the stock market. When you buy shares of a company, you're actually buying a tiny piece of that company's equity. It's why people get excited about stocks going up. If the company grows, your bit of ownership, your equity, becomes more valuable. And in startups, equity is often used as a way to attract talent. Instead of big salaries, companies offer employees a piece of the company. It's a way of saying, hey, help us grow, and if we do well, you do too. That's why you hear about people getting equity packages when they join tech companies. Of course, equity isn't always a magic ticket. If the business struggles or goes under, that equity can shrink or disappear completely. So, it's a risk but also an opportunity. The bigger the impact you make, the more your equity can be worth. To sum it up, equity in business is all about ownership, growth, and risk. It's the piece of the action you hold and the potential reward if things go well. Next time you hear about equity, you'll know it's really just about who owns what and how much they could gain or lose. Before I wrap up, I want to hear from you. Drop a comment below with any questions, or if there's any business term that's been confusing you. I'll be checking the comments and might cover your question in the next video. Thanks for watching Whats ZEE. Don't forget to like, subscribe, and I'll see you in the next one.